Thanks for taking a minute from your busy schedule today. We're going to be talking about tax returns. Do you know what's required for small business owners? But first, let me go through a couple of disclaimers. First, the information I'm giving today is current as of December 2014. I am a tax accountant and an enrolled agent. However, before you make specific tax decisions about your business based on this video, you should consult with your tax accountant. They know your entire situation. The information and situations I'm illustrating today are very broad and general, so most any business owner can get something out of it. Second, Small Business Financials is not a law firm. Any advice given here should not be construed as legal advice. Now, more to the point, let's talk about the most common types of taxes business owners have to deal with. First, there's always income tax. Whether you're personal or business, you're going to have income tax. All personal income tax is on an annual filing. If your business is a flow-through entity or a disregarded entity because it only has one member, your income tax return is a personal return as far as the IRS is concerned. A flow-through entity means that that particular entity, typically an LLC, flows through to the owners. All income taxable flows through, becoming reportable on the owner's personal income tax returns. The second type of major tax is your payroll taxes and industry-specific taxes that are typically paid on a quarterly basis. Sometimes payroll taxes have to be paid on a more frequent tax period, but the reporting is still quarterly. Most industry-specific taxes are also quarterly. There are a few that are more frequent than that, but most of them, like tire tax and highway fuel tax, are all quarterly taxes. Then, of course, there's this fun TPT or use tax. TPT stands for Transaction Privilege Tax. In the state of Arizona, a lot of us just casually call it sales tax, but there's a slight difference between Transaction Privilege Tax and sales tax. TPT means it's a privilege for transacting business in Arizona, whereas sales tax is based on products you sell. Use tax is based on the products you use that you didn't originally pay taxes on. So, the big question is, do you understand what the TPT is? Do you understand what a use tax is? Do you understand what a sales tax is? There are those three different distinctions that typically most small business owners don't really care to distinguish between. However, it might be essential to know in case of an audit, or just to make sure you're setting things up right when you're adding a new product line or a new service. You'll need to understand how you need to go about billing for those, or producing receipts, or how you want to operate that particular new good or service that you are offering. I just wanted to give you a little heads up that there are big changes scheduled in 2016 in Arizona for this particular type of tax, especially for construction owners. By 2016, the state of Arizona is trying to eliminate all city sales tax reporting so that all of it will be done with just one monthly filing to the state. The majority of small businesses that are required to report TPT or use taxes are on a monthly filing. I would also like to discuss a little bit about business procedures that are affected by tax structure. How you set up your business can greatly affect your tax structure. The first is your federal filing requirements. If you're a C corporation, you have specific filing requirements. C corporations are taxed as their own standalone entities, and those are the most highly regulated, most cumbersome to set up, but they do offer you the most and greatest asset protection. Others are the S corporation, LLCs, and flow-through entities. Depending on what you're doing, you might just have a tax return to file, but you might not have a payment requirement associated with them. Then, of course, there's the sole proprietor or the single member LLC that just report on the Schedule C of their personal income tax return. So, what kind of entity you are greatly affects your filing requirements. Confusing? You bet. Another consideration is your annual state reporting requirements. In Arizona, corporations are required to file an annual corporation report with the state. However, LLCs are not required to report annually. You only have to file the initial setup, the dissolution, or if you're doing an amendment, a change or a renewal if you had set an expiration date on your original filing. Something to keep in mind is taking money out of your business without jeopardizing your personal assets. A lot of small business owners fall into the trap of, well, it's my money at the end of the day. Well, at the end of the day, that might be so. But according to the IRS, Your business is your business, and you are not. You need to make sure you keep those two things separated. We have a webinar on this particular topic. So if you're shaky on this or you just want a refresher course on how to take money out of your business without jeopardizing your personal assets, I would highly recommend looking at that webinar. Another thing is your record-keeping requirements. Your record-keeping requirements are also affected by your business procedures. There are some specific record-keeping requirements just based on the type of record it is, like payroll records. There are strict guidelines for every business, but there are other records like bills that you can keep differently depending on the type of entity structure you are. Regardless, record keeping is essential for small business owners. The next thing that I'd like to talk to you about is how tax planning can benefit you. Tax planning is not just for the wealthy. Just setting up your entity and the type of entity can greatly affect your taxes and your overall tax situation. So it's important to set up a relationship with the person who is doing your taxes and understand tax events, because that person is going to guide you through those decisions. They can save you hundreds, if not thousands of dollars in taxes a year. Making sure that you know what taxes you need to pay can really end up helping you. But I've seen the devastation it can cause. So I cringe every time someone tells me they're not paying a particular tax that I know they're subject to. They may think they're getting this great deal now, but if they get caught, it will not be worth the effort. Here are a couple of common tax events you should be aware of for your tax planning. The birth of a child. Obviously, you're adding a new dependent, and you want to make sure you get the Social Security number in place. You can report the filing and get those great deductions for those kids. Heaven knows they're expensive. Child care credits or child tax credits. This is one I sometimes see people get hammered on. If the child is no longer eligible for the credit, and those credits were relied upon, and all of a sudden the child is 14 or 18 and no longer a dependent, this creates a problem. Now let's review some of the common deductions a tax professional might help you benefit from. This is a big one because a lot of people don't realize some of the legislation that's out there right now regarding medical expenses and some of the changes that they're trying to make. And I'm not even talking about the Affordable Care Act. I'm also talking about specifically itemized deductions, where you can take those itemized deductions, what those threshold levels are going to be, and what they're trying to change them to. There are a lot of tax events related to medical expenses. I would definitely recommend doing some tax planning if anything is going to be changing, or even just review your plan. Make sure you're doing your tax planning in the best way that's most affordable to you. Sometimes it's better to run your medical expenses through your business and do a medical benefits plan. However, only certain kinds of entities can do this. Sometimes it's better to do them all personally to help you itemize your deduction thresholds. Are you meeting the distance traveled requirement? What if you travel a lot for your business? What if you're going to a temporary location, such as a relocation assignment, and you're going to be there for a year, 18 months, or 2 years? Perhaps you don't even know how long you're going to be relocated. Obviously, college is a huge situation right now, and every president since I can remember has made college and education a main focus of their talking points. This is an area that changes with almost every presidency. Seek help when you're doing your college planning or while you're putting together your benefit package if you're offering compensation for educational reimbursement for your business colleagues or employees. Knowing how unemployment can affect your employees can also make a big difference. If you have a side business or if you have a spouse who might have outside employment and you file jointly, you should know how it will affect your joint return. Are you of the right retirement age? Can you start drawing on your retirement? Are you required to draw on your retirement? If you're self-employed, can you still contribute to your retirement plan? All of these are tax questions that need to be answered by a tax professional or should be addressed by a tax professional before retirement is even on the table. Tax law changes frequently, so you want to make sure you're speaking with your tax professional who is keeping on top of that information for you. If you went through a personal bankruptcy or an employee is going through a personal bankruptcy, you might be dragged into that through a payroll garnishment. We don't want to talk about failure at all, but as you succeed in your business and as your business grows, it's even more essential for you to protect your business assets. Keep business assets separate from your personal assets in order to protect them and in order to plan for the proper succession. Make sure that once you're ready to retire, step down, or to sell the business, your tax professional knows what the asset ramifications are and to plan for them. Usually, if you plan on selling your business, you want to start talking to your tax and financial professionals as soon as possible. You want to build your team so your financial picture is as rosy as it can be when you're looking to sell. If you're very lackadaisical about your reporting responsibilities, such as your reporting or filing requirements, and you don't care if you're on time or not, all of that will reflect on your business when you're ready to either sell, close, or pass away. If you want it to go to your beneficiary, it'll be affected by your business structuring. That can greatly increase your amount of tax. With proper planning, you save a huge tax bill. Obviously, this material gets me excited because I love talking about different tax events and how we can plan for them and how we can help small business owners. Here at Small Business Financials, small business owners are the key, and we love to do whatever we can to save you as much time and money as we can. There's a lot that I've covered today. I've talked about the different types of taxes for business owners, different business procedures that might be affected by your tax structure or your entity formation, how tax planning can benefit you even if you're not wealthy and have a gazillion things to protect. Understanding and planning for your taxes now and knowing how it can benefit you might end up saving you a lot of time and a lot of taxes, giving you additional capital to grow your business that much faster. Then we talked about some of the tax events and what to be aware of. I highly recommend that you don't try to tackle your taxes alone. This is a huge mountain for a small business owner. Be the expert for the goods or services that you provide, but know enough about taxes to find a professional that you can trust and that understands your situation. Plan for your future and for your protection, either the protection of your business or the protection of your personal assets. That planning is essential. Develop a working relationship with your tax preparer or planner. They are a valuable asset in small business and essential to all small business owners. I just want to reiterate that here at Small Business Financials, we love small business owners and want to be your trusted tax professional. Give us a call or visit our website at smallbusinessfinancials.com for more information about a free tax consultation.